In today's video, we're talking about what it means to be an accredited investor or a non-accredited investor. Knowing the difference and which one you are makes a difference in what you have to do in order to unlock opportunities you never thought were possible. I'm Michael Parks, helping you to invest in apartment buildings to live life on your own terms. Here we go. What is an accredited investor? Generally speaking, an accredited investor is somebody who earns over $200,000 a year, $300,000 jointly with a spouse, for the last 2 years, and has the expectation of continuing to earn that much or higher in the coming year. The second criteria that can qualify somebody as an accredited investor is if they have a net worth of over $1 million, excluding the value of their primary residence. If you have been saving in your retirement accounts for a while, meeting this $1 million threshold may be closer than you think. In fact, according to Investopedia, in 2020, over 10% of American households are qualified as accredited investors. However, I bet most of them don't realize what this means and the opportunities it unlocks for them. There's certainly several details and other ways to qualify as well. Now, I'm not a CPA or an attorney, and you should always consult with yours. Accredited or non-accredited? Why does it matter? It actually matters a lot, and it matters because the SEC has some very specific rules about who can invest in what type of unregistered securities. Unregistered securities are things like hedge funds, private placements, and real estate syndications. Real estate syndications are often made available through one of two different means. One's called a 506C. These are for accredited investors only, and they're the ones that you may see advertised. In fact, you are allowed to advertise 506C opportunities. However, only accredited investors can invest in them. This is a fairly recent change with tax laws in the last several years. The second kind of offering, the 506B, is available to accredited investors and up to 32 non-accredited investors as well. However, there's two criteria that allow a non-accredited investor to invest. The first is they must be sophisticated. I'll read what that means. They must have sufficient knowledge and experience in financial and business matters to make them capable of evaluating the merits and risks of the prospective investment. The second criteria is there must be a prior existing relationship. These opportunities cannot be advertised generally. So you need to have an existing relationship with the person that is offering the 506B security. So what's better, the 506B or the 506C? Well, it actually doesn't matter which mechanism is used. What matters is how good the investment opportunity is and your evaluation of that opportunity and the sponsor of the deal. It just so happens that there's different rules based on the type of investor you are. So what does this mean? Whether you're accredited or non-accredited, what you want to do if you're interested in investing in these opportunities is build a relationship with an experienced syndicator. Somebody who has these offerings, and now that you'll have the relationship, you can be given access to those offerings. For instance, people in my Spire investor group get access to opportunities that cannot be openly advertised. If you're interested in seeing these opportunities, you need to join my investor group. You can do that at spireinvestmentproperties.com/join. Joining the group has no cost or obligation, but it will get you access to opportunities that you would otherwise never be able to see. So go ahead and join my investor group now at spireinvestmentproperties.com/join.